Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide, the Group B problems from Chapter 8. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor that can help with that understanding. And as a quick aside, this here next problem here is on depletion, and you know, when working with depletion, go back and watch the theory videos for this chapter, because remember, depletion, and I'm not going to cover old theory, and I mentioned this in the previous problem videos, but you think along the lines of, if when you have an asset, a fixed asset, you think in terms of, excuse me, you think in terms of depreciation. If you have an intangible asset, you think in terms of amortization. And if you're thinking about natural resources, you think in terms of depletion. Okay, these things, depreciation, amortization, and depletion, are basically the same thing. Okay, it's just a different word for the different, category of assets, but they're all kind of worked the same exact way. So I'm not going to go back over all of the theory on depreciation, okay, in order to be able to do the depletion calculations. If you don't understand depreciation, then go back and watch the theory videos on the depreciation. Okay, we're only going to pick up and with the new concepts, the new stuff, assuming that you've already know the old stuff. So if you don't know the old stuff, go back and study it and watch it again. Right, and again, depletion, it has to deal with natural resources. So O'Brien Oil Company's balance sheet includes three assets: natural gas, oil, and coal reserves. Suppose O'Brien Oil paid $1.8 million cash for the right to work a mine with an estimated 150,000 tons of coal. Assume the company paid $66,000 to remove unwanted buildings from the land and $46,000 to prepare the surface for mining. Further, assume that O'Brien Oil Company signed a $32,000 note payable to a company that will return the land surface to its original condition after the mining ends. During the first year, O'Brien Oil Company removed 38,000 tons of coal, which is sold on account for $28 per ton. Operating expenses for this first year totaled $250,000, all paid in cash. So it says record all of O'Brien Company's transactions, including depletion, for the first year. And then 2, prepare the income statement for its coal operations for the first year. Okay, so let's see here. It says here, paid. O'Brien Company's balance sheet includes three assets: gas, oil, and coal. Suppose O'Brien Company paid $1.8 million cash for the right to work the mine with an estimated 150,000 tons. Okay, so first off, they are paying cash, so I'm going to credit cash for 1.8 million, and that means I'm going to debit coal reserves for 1.8 million because they're paying the cash for the right to work the mine. Now, and they're estimating 150,000 tons of coal, all right, to mine with an estimated 150,000 tons of coal, all right. Assume the company paid 66,000 to remove unwanted buildings from the land and 46,000 to prepare the surface for mining, okay? Well, remember back in the theory videos, as far as assets are concerned, that any costs associated with an asset before it's actually put into operation become a part of that cost. So we're going to debit coal reserves they're paying 66,000 to remove unwanted buildings and 46,000 to prepare the surface for mining. So that's 110,000. So I'm going to debit 110,000 to coal reserves, and we're going to credit cash for 110,000. Excuse me. Okay, so again, going back into the theory for an asset, anything that's associated with the cost of that asset before it's put into use becomes a part of the cost of the asset. The coal reserves is an asset, and so we're paying 1.8 million coal reserve. So this is my balance sheet here, and then I'd have less depletion, right? Would be whatever that is. So I'm sitting here at 1.8 million plus 110,000 so far would be the book value of my coal reserve. Okay. Further, assume that O'Brien Oil Company signed a 32,000 note payable that will return the land surface to its original condition after the mining ends. Okay. So again, I'm going to debit coal reserves for 32,000 and credit note payable this time for 32,000. Okay. So that's going to be an additional 32,000 as part of my book value for my coal reserves. All right, so that took care of that right there. During the first year, O'Brien removed 38,000 tons of coal, which sold on account for $28 per ton. Operating expenses for the first year totaled $250,000, all paid in cash. Okay, so excuse me. We have to do a little bit of a calculation here. Right, so we have our book value here so far is the 1.8 million, the 110,000, and the 32,000. Remember, this 110 is 66 plus 64, right? So that gives me, let me get out my calculator, 1,800,000 plus 110,000 plus 32,000. So that gives me 1,942,000 as my book value, right? That's my book value of my coal reserves, right? Now, we know that there's 150 tons of coal, right? That's part of that reserve. So we take our 1,942,000 and we divide that by the 150,000 tons. And that gives us 12 point, I'm going to round it, it's 12.94666, so $12.947 per ton, all right? And we're removing 38,000 tons. So if I have 38,000 times 12.947. We end up with excuse me, 491,000. Oops. Yep, $973. Okay. Now, let me just take a quick do a math calculation, because the solution shows 492,480, and this is just a matter of rounding, right? So if I take 480 and divided that by 2 by come on. All right, I'm not going to worry about it. Let's see here. I'm pounding on a calculator right now, so 12. Okay, so they did rounding it even more. Oops. Times 38 times 9. 38 times 12.95. Interesting. All right, let me go back and do the math again. All right, so I have 1,800,000 plus 66,000 plus 46,000 plus 32,000. It's all in my math. That's wrong. This here should not be 42. 1,944,000. Okay, there's where my error is. All right. 44,000. So if I take, when I add this up, I should get 44,000, not 42,000. That's why I was slightly off. So I divide it by 150,000, and I get 12.96. And if I take 38,000 and multiply that by 12.96, I end up with, yep, all right, $492,480. Okay, so yeah, the amount in the solution manual is correct, right? That is the amount of our depletion. Okay, so after all of that bumbling here due to my error, the 1.8 million plus the 110,000 plus the 32,000. This is not 66, this is 46 over here. So this was 66 and 46. 66 plus 46. It ends up being 1,944,000. And if I take the 1,944,000 and I divide it by the amount of coal that's available, which is 150,000, I get $12.96 per ton. Okay, we're mining 38,000 tons. All right, so I multiply it by the 12.96. I end up with $492,480 as my depletion, because we've depleted it by 38,000. So go ahead and pause the video, because I'm going to erase this in order to be able to write down the journal entry. So I have I'm going to debit depletion for 492,480, and I'm going to credit accumulated depreciation. Depletion. It's not depreciation. Depletion. coal reserves for the $492,480. Okay, so that records my depletion of the 38,000 tons. Okay, now it says that the 38,000 tons was sold on account, right, for $28 per ton. So 38,000 times $28 per ton is $1,064,000, right? So we're normal journal entry, right? I'm going to debit my accounts receivable because I'm selling it on account for $1,064,000, and I'm going to credit my sales revenue because I'm selling it for $1,064,000. And then lastly, it says operating expenses for the first year totaled $250,000, all paid in cash. Well, I'm going to debit my expenses for $250,000, and I'm going to credit cash for $250,000. Okay, so those are my journal entries. All right, pause the video, write them down. Okay, so I have 6 journal entries. 4, 5, 6, 1, 2. So I am now going to erase them because now I have to do number 2, prepare the company's income statement for its coal operations. So let me erase these. Okay, so for the income statement, of course, you have to have the heading, okay? I'm not going to repeat the heading. And I'm going to have sales revenue of $1,064,000. And then I'm going to have depletion expense, which we had calculated to be $492,480. We had operating expense for $250,000, which gives us a total expense of $742,480. And then that will then give us a net income of $321,520. Put your dollar signs in the right place. Make sure you got your underlines and double underlines correct. And again, your heading, I'm not going to go over it again, but that's what your income statement should look like, okay, or facsimile of it. All right, so that's it for this problem. And again, if you didn't understand something, go back and pause and rewind the video. The only difficult part about this was the calculation of the depletion expense. All right, but everything else, you should have been, out of all of this information, if you read it slowly and you take it piece by piece by piece, you should be able to create the journal entries. If you just read over it quickly and then just start slapping journal entries together without taking it slowly and looking at each individual word that's being presented here and what it means, you'll go wrong if you're just reading it over quickly. But if you take it word by word by word and you look at each and every piece and you already understand the previous concepts, you really shouldn't have had too much of a difficult time creating these here journal entries, other than calculating the depletion expense, because all of this stuff is nothing more than what we've had before. Booking an asset and its associated costs, Um, we have a note payable here, right? We have, as part of the land, so that was part of the booking of the costs. Then we had the calculation of the depletion, and we made a sale on account, and we record the expenses. So, right, I'm babbling on. So if you didn't get it, go ahead and rewind and watch the video again. If you still didn't get it, go back, figure out where you're having a difficult time at, and go back and watch those 30 videos. And if you're still not getting something, feel free to contact an instructor. Okay.